So, in today's video, I'm going to be taking you through the biggest mortgage and property news this month. Plus, I'll also be giving you some examples of the best mortgage rates out there at the moment. So, let's get into it. Two of the biggest stories this month have been around potential changes to property taxes. Now, both of these are just based on rumours at the moment, and we're unlikely to know for sure until the budget in November. One of these rumours is that Treasury officials are reportedly reviewing stamp duty, officially known as stamp duty and land tax, which applies when you buy a property. It's a really old tax introduced back in 1694 and has had many facelifts since then. It's a tiered tax, and how much you pay depends on the price of the property, and it differs in Wales and Scotland, but it could set you back thousands of pounds. First time buyers don't pay stamp duty on the first £300,000. Now, while nothing's been set in stone yet, we've heard that Rachel Reeves and Co. are looking to replace stamp duty with a national tax. This will be paid on properties worth more than £500,000 when they are sold. So that's different from stamp duty, which is paid by buyers when they complete on a property purchase. The idea is that the new tax would be a more reliable, consistent source of revenue and ultimately raise the same amount as stamp duty for the government. And that's the case even with fewer people being impacted by the new tax. So the new tax would only affect 1 in 5 property sales, compared with about 60% of homes hit by stamp duty. Despite this, there's been some criticism about how it would disproportionately impact people in the cities and the south of England, where properties are more expensive. And experts have also warned that these tax changes would particularly affect downsizers whose homes have significantly grown in value over several decades. It could put them off selling altogether and prevent larger homes being freed up for families. And then there's problems it could also potentially cause for the housing market. So estate agents say that even the speculation of this tax being introduced is likely to slow down the already price-sensitive housing market. Now, the next tax that's being discussed with regards to property is national insurance. Now, this is slightly different as it will apply to buy-to-lets, as the government reportedly would like landlords to pay national insurance on profits from rental income, which could be around 8%. Again, it's not been decided yet, but you won't be surprised to hear it's already an unpopular proposal amongst the landlord community. What's more, there's also a concern that these additional costs to landlords will be passed on to tenants anyway, pushing up rents and making the already difficult housing situation even worse. Next, if you're looking for a mortgage, so say if you're a first-time buyer or you're looking to remortgage, you'll want to know what's going on with mortgage rates and what could happen in the near future. So in recent weeks, we've seen a real mix of activity in the mortgage market, with some lenders increasing rates while others have cut theirs. It's also been an interesting month economically, with a recent cut to the Bank of England base rate, which is one of many factors that play a part in what happens to mortgage rates, and inflation rising higher than expected, which in turn impacts the decisions made around the base rate. So, what does this mean for mortgage rates over the next couple of months? Well, for now, we're unlikely to see any big swings in the market. Instead, average mortgage rates are expected to remain in the 4 to 5% range, as hopes for another base rate cut this year have been dampened. Even if another cut is announced by the end of the year, keep in mind that base rate cuts are normally priced into fixed rate mortgage deals before a cut is even announced. We've done a full analysis of what's going on with mortgage rates at the moment over on the website, and if you're in the process of getting a mortgage or remortgaging, we've answered some key questions to help you decide what to do next. Next, we've got some data published in the newspaper that suggests homeowners are having to pay nearly half of their salary towards their mortgage repayments. And this is the highest financial burden on households since before the 2008 financial crisis. Back in 2008, mortgage repayments were eating up 53% of salaries, and right now the average homeowner is paying 43% of their salary towards their mortgage each month. Slightly lower than the 49% rate last summer, but still a huge chunk of earnings. It's partly as a result of rising mortgage rates, which are now around 5.12% on average. Cheaper rates are available, as I'll go into shortly, and it's worth talking to a mortgage broker about whether locking into a fixed rate deal could be a good option for you at the moment. And to finish off the news roundup, we've got some disappointing data about the UK Mortgage Guarantee Scheme. So it turns out the government scheme designed to help first-time buyers onto the property ladder with small deposits hasn't been as much of a lifeline to aspirational homeowners after all. The latest figures showed that just over 56,000 people had used the Mortgage Guarantee Scheme in the last 4 years, accounting for 1.4% of mortgages during that time. As per this scheme, buyers can get a mortgage with a 5% deposit rather than the typical minimum of 10%, with the government guaranteeing the remaining 95% and helping people buy a property who might have otherwise been unable to. But issues with the scheme have made it more difficult to support buyers in more expensive parts of the country. I mean, the data's disappointing to say the least, especially given the mortgage guarantee scheme was made permanent in July this year. And yet, experts say the scheme doesn't help open up the housing market, nor does it create homes or meaningfully lower borrowing costs. Now, with that done, let's move on to the best mortgage rates. So, just before I start, these will definitely change as they always do, and they may not be available to you as they'll depend on your loan to value ratio or the LTV. However, they should give you a sense of what's out there. If you want to find out what rates you could get for your own circumstances, do have a look at our mortgage comparison tables, which give you the best rates in real time. Just go to becleverwithyourcash.com/mortgages and click Find Today's Top Mortgage Rates. But for now, I'm going to give you some examples of the top rates currently available based on a £350,000 property based over a 35-year term and different size deposits. I'll go through fixed deals first, which offer a fixed rate for a specific amount of time, and a selection of tracker mortgages, which are variable and move in line with the Bank of England base rate. What makes them the cheapest deals is the monthly cost rather than the interest rate. So, first up, the top 2-year fixed rate mortgage deals. With a 10% deposit of £35,000, HSBC leads with a rate of 4.18% and a fee of £999, which gives you a monthly repayment of £1,428. If you double the deposit, giving you a better loan to value of 80%, Co-op Bank offers a rate of 3.9%, the same fee of £999, and a lower monthly cost of £1,222. And finally, if you've got a 40% deposit of £140,000, you can fix for 2 years at 3.75% with HSBC with a £999 fee and a significantly lower repayment of £898 a month. Next, the best 5-year fixed rate mortgage offers are all offered by HSBC, whether you've got a 10%, 20%, or 40% deposit. Each charges a £999 fee. Starting with the 90% LTV, you can get a rate of 4.19%, which will cost you £1,430 a month. If you've got an 80% LTV, you can get a lower rate of 4.07%, which will reduce your monthly repayments to £1,251. And at a 60% LTV, you can get a sub 4% rate of 3.87%, which will slash your repayments to £913 a month. And finally, to finish off the fixed deals with the 10-year ones, which aren't as popular as the shorter terms, the top offers are all from Nationwide, which charges a £999 fee. So with a 10% deposit, you can get a 4.99% interest rate, which will cost you £1,588 a month. With a 20% deposit or 80% LTV, you can get a lower rate of 4.64% and lower repayments of £1,350 a month. And if you can put down a £140,000 deposit, giving you a 60% LTV, the top deal is 4.39% over 10 years, reducing your monthly repayments to £980 a month. And just quickly onto the tracker mortgages, I'm just going to look at the 2-year ones for this video. We've got HSBC offering 4.69% if you've got a 10% deposit. This means you'll pay £1,527 a month, and there's also the £999 fee. If you've got a larger deposit of £70,000, Halifax has the top deal with a rate of 4.28% and a £1,599 fee, giving you monthly repayments of £1,286. It also gives the cheapest deal with a 60% LTV, so you're looking at a rate of 4.11% and costs of £943 a month. As I said, these are just examples of what's out there at the moment to give you an idea of where rates are at. They're likely to change and they won't be available to everyone, but for more information, do check out the mortgage tables yourself over on the website. And that's it. Thanks so much for watching. Check out these videos here for more ways to make the most of your money.